TowneBank Mortgage is an equal housing lender. NMLS number 512138. This is not a commitment to lend. Welcome, everyone, to the June recap of Wilmington Mortgage News. I am one of your hosts, Tyler Cralle, and with me, as always, the Southeastern North Carolina sales manager of TowneBank Mortgage, David Macaione. David, thanks for being here, as always. Appreciate it.
Of course, Ty.
Like the new Diggs studio?
Yeah, I like the windows behind us like that. That's all cool. The banner.
I know. It might rain, so we might know what that's like when that's happening while we're doing a podcast.
That'd be interesting, huh?
We have not done yet. As always, we got to hit, of course, compliance. My NMLS number is 202-8201, and David's is 117378. And so, like I said, this is kind of the June recap. We'll probably be releasing this sometime early July. A lot happening in June. As always, I think we should start from the beginning, and what we have been sort of talking about since probably the beginning of the year, and what we'll probably usually always be talking about, is what's happening with the labor market and what's happening with inflation. And once again, David, another month, another hot jobs report. The economy created 339,000 jobs in May. Economists were projecting just under 200,000. So it was not only, hotter than expected, it was way hotter than expected. And that kind of kicked off the beginning of June, which was, okay, labor market still is not cooling off despite, the Fed funds rate being raised to over 5%. And it's like I said, it's another month, another hot jobs report.
And what we've done really for the whole month is we ranged up to the higher end of the range we've been in for a year as far as mortgage rates and gone sideways. We've gone sideways at the higher. So, that sideways motion implies some sort of breakout. I just hope it breaks out the right way.
Yes.
Which I think is going to be, we'll talk about the upcoming, but let's talk about the past. What other past economic data did you have the numbers on?
Well, I did also want to note that I think it's important that once again, it was a pretty broad gain with regards to jobs.
Right.
Like every industry saw 40,000, 50,000. I mean, it was across the board increases. So it wasn't like just leisure and hospitality was sort of creating this sort of myth of there being this hotter labor market. I mean, it's every industry is seeing job growth, which is kind of funny because there are industries like media, for example, and finance, which are seeing layoffs. Those tend to get over-reported because the media is the media, and so when you're seeing job losses in the media, that's going to get reported. And then, of course, finance, business news, of course, pays a lot more attention to what's happening in finance, and so a lot of times people are saying, hey, it's weird, I'm seeing all these reports about layoffs, but in reality, you're seeing all these jobs reports coming in hotter than expected. I think that's kind of the answer. It's just you're seeing an over-report. It's not being over-reported, but they just tend to focus on those sectors, and they get more attention when all the other industries seem to be doing a lot better.
Our industry definitely had its layoffs going on, starting a year ago.
Well, I think that's also something maybe to mention is that, in the real estate business, realtors, you're not going to see layoffs because most realtors are not employees or necessarily don't get fired the same way that you see in other industries. So we have seen reports that there's been a big drop in people who were realtors and have sort of left the industry and gone somewhere else and probably taken one of the many jobs that's out there. But there's no real report that's going to show that with regards to layoffs. You're not going to see huge layoffs in the real estate industry.
I wonder if they keep their license. I guess they don't report that at all. I guess.
Well, I mean, you do see people drop off and that there are people who aren't renewing their license. And I guess that's what you're seeing. But I have a feeling that, as you point out, it might even be bigger, that people are going to keep their license
and not work.
while not working full time in the sort of real estate industry.
That's an interesting question. I should ask one of the realtors I know. What does it cost to keep your license every year? Actually, my wife knows that.
That's a lot easier question.
She's an inactive realtor and will not be active, but she does keep her license.
So it is interesting with the labor market in that we are continuing to see sort of broad-based gains across all industries. Now, as I mentioned, we are watching the labor market, but probably more important is what's happening with inflation. And beginning of the month, we did get CPI, of course, Consumer Price Index, which was very good. It was a great report. The number fell to 4%. That was down almost a full percent from April when it was 4.9%. So it fell to 4% in May. And in fact, was the lowest level since March 2021. And of course, one of the big drivers of that is food and energy. Prices continue to drop, mostly energy. So we did get a good CPI number. So as I mentioned, we have continued to get hotter than expected jobs reports, but this was a good inflation report, which people are hopeful that this will continue going forward.
You know what one of the good measures of food is to me? You know about my bag,
of
of onions. But there's another one for summertime, which is watermelons.
Yeah.
And watermelons usually on Memorial Day, and we'll see on 4th of July, typically we'll get down to, if not $1.99 for a watermelon, $2.99. Right now, and they're always inexpensive in the summertime, but right now at Harris Teeter, they're $6.99. And that's just, for a watermelon, that's a lot of money.
That is a lot of money. Now, is that solely inflation, or was there an issue with like the watermelon crop?
No, I don't think there's a watermelon problem.
Okay.
I think that watermelons are heavy and they take up a lot of space on a truck, and they probably, I bet, shipping.
Yeah, and it's also probably one of those items because it is seasonal for the most part. People look at buying watermelons, you think summertime, that people maybe not, you can probably maybe raise the price a little higher and people will be like, is that what we paid last year? I don't know. Let's just get it. You know?
No.
So it's maybe more of an item that you're not buying every week and week out, that you'll know exactly when they increase the prices, because that seems like a big jump.
It's a big jump. Because I keep a watermelon cut up in my fridge all summer long. Mm-hmm. Just always. It's my favorite thing.
Even with the price hikes?
Yeah, well.
Now, I do want to point out that the number was good. So we did see a 4% number, but it was also better than expected. They were expecting it to drop to 4.1%. But I also wanted to note that we talked about on the last podcast that one of the reasons that we did see that big drop is because the year before, we really saw inflation ramp up, and it was a big month-over-month number, and that fell off. So that's one of the reasons why you're probably going to see some dramatic drops. It's not so much that things are happening now; it's what happened a year ago. You
know, in talking with some friends of mine in about inflation in regard to interest rates, and a lot of them are realtors. Mm. They're, a lot of people have this expectation of inflation, and I. One thing I said to one of the agents, I said, well, we're not going to see the prices go back down to where they were. Yeah. My bag of onions is not going to $1.29. What it means is that we're just going to stop seeing the increases, or at least the pace of increases are going to slow down. But there are people that, like me, want to see $1.99 watermelons again, and I don't think that's going to happen.
Well, not unless something bad happens.
Right.
That's the one sort of downside. And while we're on the inflation number, it should be mentioned, we also got PPI, of course, producer prices. That is what producers are paying for goods, and we have seen just a dramatic sort of collapse in price growth in producer prices. Yeah. And this month, or I should say in May, demand dropped, or I should say the producer price index for final demand fell to 1.1% in May, down from 2.3% in April, lowest level since December 2020. So we are seeing a dramatic drop in producer prices. And so hopefully that's a good sign, because producer prices do front run consumer prices. So hopefully this is a sign that we are going to see, because that's well below the target rate.
Oil's helping a lot. Yeah. I haven't looked at oil in a couple of days, but it's in the 60s, right?
Yeah, it's hovering right around 70, drop a little bit under, maybe a little bit over. But yeah, it's a lot lower than it was last year. So
the rain set in.
Yeah, I know. I'm seeing it right now. I wonder if it's coming across on video. If not, we're gonna find out. But I mean, so this is at least, I think, optimistic, kind of looking forward. So it's, I think, like I said, kind of good news that we are seeing better inflation data while still having a hot labor market. That's kind of the best of both worlds. Let's hope that can continue.
We're having a hot everything market. Like you told me this morning, I wasn't paying attention, but consumer confidence was up for the 17th straight month?
Well, no. It was the highest level in 17 months.
I mean, that kind of flies in the face of 5% interest rates from zero.
Well, yeah.
I mean, these rate hikes, eventually you'd think they would wear people out. Or inflation. Inflation is usually an issue for consumer confidence. But, there's nothing that I'm seeing in the numbers that tells me we're going to have an economic slowdown.
Well, that's what's kind of weird because, while we're talking about, let's talk about retail sales. So retail sales in April were actually higher than expected. They rose 0.3%. Which was smaller than the 0.4% increase in April, but it was the second straight month that we saw a positive number, and economists were projecting a 0.1% drop. So we're seeing higher borrowing costs, and we're seeing inflation, and yet, we're still seeing consumers buying, at least at a decent rate. And there was one interesting aspect to this: retail sales are not adjusted for inflation. Right. So you do have to look at the data. And even though the reports don't technically line up, while retail sales were up 0.3% for the month, prices were slightly higher at 0.4%. So technically retail sales were down about 0.1%, but it's still, almost flat.
Durables were up.
Yeah.
Today.
And so, so that's what it's telling us, is that consumers still aren't being deterred by higher prices and higher borrowing costs.
I think they're probably just making different choices.
True.
Like, the other day in Harris Teeter, I saw some brands that I had never seen before. Like, I think different types of retail outlets are bringing in less expensive brands. Mm-hmm. Those are the kind of things people do. They adjust.
Yeah, that's true. You have to wonder when people go to the grocery store, are they getting the store brands? Are they buying kind of like the mid-tier brand, or are they going for the premium brand? And that would be interesting if we could see the breakdown of numbers at grocery stores when looking at what consumers are spending their money on. But I would say probably the biggest news that we got this month was from the Fed. And it wasn't unexpected, but the Fed decided to, was it skip or pause or?
I don't think he actually used the word pause.
Yeah.
I don't know that, we would call it that. They paused. They did not raise interest rates. But Powell, in his testimony, actually, I watched his testimony the week after more than I actually watched the press conference. Mm-hmm. And he basically said, hey, we still have further to go. Mm-hmm. We're just slowing down the pace with which we're going to get there. He said we had to get to where we got fast. Yeah. And because they let inflation out of the bag. And so they still believe they're going higher. Now, of course, the pause lets them look at the data, but the data just keeps, I don't want to say disappointing. You can't be disappointed with a good economy. Yeah. But I don't think they're seeing what they want to see, especially in the labor market, because they've said they are willing to allow for 5% unemployment, and we're nowhere close.
Well, what's also interesting is you're seeing a lot of economists on television, and you never know what their motives are, but a lot of them seem to be arguing that there is a lag when it comes to rate increases, and when you're raising them as quickly as they did, which you're right, Powell did mention that at the beginning, it was all about speed. It did not matter what the end was going to be. It mattered how fast they were going to get there, which is kind of weird. But now he's saying it's about where we end up, and it doesn't matter how long it takes us to get there, that they're okay with taking breaks and only raising a quarter instead of doing 50 basis points. And so now they're more concerned about the destination versus just getting out of where we were.
Well, and think of the speed to put it in perspective. They raised 4 times in the last year, 3/4 of a point. Yeah. The last time they raised 3/4 of a point was in early 1994. And only one time. Yeah. And then they did it 4 times. And that was 4. How many times have they raised rates now? 8 times? I forget.
Yeah, no, I think it was 10 straight.
10
straight.
So now, now we're going to see, I think that, we have their favorite measure of inflation coming up Friday, the core PCE. Mm-hmm. And then on to the following week, we're going to have non-farm payroll. But I haven't looked at how that comes across with the 4th of July.
It's going to be a busy week because we're going to have Tuesday off. So it's still going to be jobs week. And so there's going to be, I think you're going to be getting like ADP, JOLTS, everything's going to be like on that Wednesday. There's just going to be a lot of data the following week, but they're still going to release it on Friday.
The 4th is Tuesday.
Yeah, the 4th is Tuesday. So I think we're getting something like I think maybe construction data on Monday.
Yeah, that means nothing's going to get done on Monday, though.
And then you got Tuesday, and then Wednesday, we're off and running. It's going to be a lot of data in those 3 days with, of course, non-farm payroll on Friday. Now, what's interesting is that you mentioned the press conference. I did have some quotes, at least with regards to housing. So Powell did address housing because a lot of people have, Powell has mentioned housing back in the day when rates started, thinking that the housing market was overheated. Now he's saying, quote, the housing sector nationally has flattened out and maybe even ticked up a little bit, but at a much lower level from where it was with rates as high as they are. So supply and demand can get back into alignment. He went on to say that we do not think housing inflation will be coming down significantly over the course of this year and next, or will be coming down significantly over the course of this year and next year. And so to me, he's saying, one, that we've seen the bottom with regards to housing. And then two, we're not going to see rampant inflation. So it seems like what he's arguing is that over the next couple of years, we're just going to see home prices remain somewhat stagnant.
I agree.
A little bit of increase, a little bit decrease, but nothing dramatic.
I agree. But I think the bottom, if we've seen the bottom, it's going to be a U-shaped bottom. It's not going to be a V-shaped bottom. I think that probably it's going to be a little bit tough through this winter into spring. And we've talked about this, 100 times. Like, how does all that economic data, translate into the housing market and where rates are? Everybody that I know that needs to buy a house is trying to buy a house. They just can't find one. Yeah. And every deal that I'm doing right now that's in the reasonable price range, I'm not talking about the $1 million houses, every single deal, every one, people are offering above the ask price, every single one. And there's multiple offers. And there's just not enough of that going on because there's not enough houses. Are there people that are waiting for, this seems to be a recurring theme of this show. And, are there people waiting because of interest rates? Sure. Those people are going to be in a much more competitive atmosphere if they wait for rates to go into the 5s or the 4s, because all those people that are waiting are going to come out of the woodwork, and there's still not going to be any houses because we've got to get through this period and we've got to get those builders built. What I would like to see over the next year and a half, you get a lot of the new construction, say out in Brunswick County, people buy homes now, and then when the rates go down to 4.5 or wherever they're going to go, maybe some of those people, instead of refinancing, will sell. They're like, all right, let's take a little profit and move on to another house while rates are low. So it's going to take those new homes becoming existing home resales is what needs to happen.
Well, I think one of the sort of benefits that we have been seeing in the data, at least with regards to housing, is, we started the year, builder confidence had fallen to multi-decade low, I think. It was bad, because we'd seen rates jump up and you could just tell that the buyers had kind of disappeared. Plus it was the ending of the year, which normally is already a downtime. And so I think it scared a lot of people. So you had builder confidence falling. Well, this came out about a week ago, was home builder confidence nationwide jumped to 55. That was a 5-point jump. And in fact, was the first time that number's been over 50. 50's looked at kind of like being a neutral point. So it was the first time that we were in positive territory in almost a year. It was an 11-month high. And so it said builders, even though, we still have interest rates higher and prices for, commodities to build a home are higher than they were 2 years ago, builders are like, you know what? We feel confident that the housing market, because they're looking at housing prices, they're looking at what the cost of building a house is versus what they're going to be able to sell that house for. And there's no doubt that they probably at the beginning of the year thought that there was going to be a much bigger drop in home prices. And now they're like, all right, it didn't happen. So we're going to start building. And you're seeing that in the data. Once again, looking at housing construction, housing starts jumped 21% in May. So it was up 21.7% from April. It's the highest level since April 2022. Building permits were up 5.2%. That was the highest level since last October. And housing completions were up 9.5%.
And new home sales?
And the new home sales, we got the data this morning, that jumped 12%. It was supposed to fall 2%. So
so much for the market tanking.
But so it tells me that builders who are bracing for a drop in home prices, not 2008 drop, but they were expecting a bigger drop. And now they're going, well, if they're getting back in, they must assume that we bottomed.
Yeah, no, I agree. I mean, there's just not enough. There's just not enough houses.
Why not?
It's that simple, and they're the only ones that can fix that.
Well, I think what was the stat that we mentioned last time that I saw where it said that normally, when you're looking at inventory, it's like 10, 15% as new homes.
Right.
And right now it's like 30%. Right. And that just shows you how few existing homes are up for sale right now. And so therefore builders are like, hey, we'll fill that gap and we'll build homes. Now, the problem that we have in Wilmington is there's just not that many places.
Go drive through Brunswick County.
But Brunswick County, Pender County. And, I've talked to some, realtors about that, where it's sort of like people come to town to visit and they say, I want to live in New Hanover County. And it's like, do you?
Yeah.
It's like you might be able to get a more house, more yard, and lower property taxes.
And it's just 15 miles that way.
Oh, yeah.
I mean, it's just right across the river from downtown.
Well, it's funny, too, because I was talking to a friend of ours about how if you're in Brunswick County, that you're actually maybe closer to downtown with regards to speed than if you're at the beach where we are, just because of traffic, that you can get to downtown quicker and get out of downtown quicker living in Brunswick County. And so it's a good way to sort of, like I said, get a little bit more house, a little bit more yard, and still get to enjoy all the amenities that Wilmington has to offer. I did want to now, keeping on that topic, so we know that home prices, or I should say inventory levels are much lower than we would like them to be. We just, you can look at the market and realize that. But when you actually see it in black and white is a different experience. So the National Association of Realtors came out with a report recently that was looking at affordable housing. And what they found was the national housing market is missing 320,000 home listings valued up to $256,000. Why that price point matters? That is looked at as an affordable price range for households earning at about $75,000. So what they're saying is that middle income buyers can afford to buy just 23% of listings in the current market. 5 years ago, that was half of the available homes.
Good luck finding a house that you want to live in New Hanover County for $250,000.
Well, I mean, here it's almost not existent.
I mean, if it's existing, it needs to be totally renovated.
And I would actually argue, I don't think, because I try and keep up with Zillow every day and look at what's being listed. I don't think I see a house, like a single family house. Condos, $250, I see that.
There's condos.
But I don't think I've seen a single family house that isn't in need of massive repairs.
I can't remember the last one. Right, I can't remember the last one that I did in New Hanover County that was $250. Yeah. They're not there. Now, you go into Brunswick County or up into Pender, in certain areas you're going to find it, but not in this county.
Well, and I know did a podcast recently with Sherry, and you were talking about some of that data that we were looking at that I had given you, and you talked about it, was how big of a drop in inventory. I think it was from 2019 to this year, inventory is down 68% in New Hanover County. And home prices are up 62%. So, I mean, they're directly correlated.
That's the part about this that's so aggravating. Even though interest rate, everybody did take a big pause when rates went up. Yeah, no question. Yeah. Like the builders, they all of a sudden, they took a big breath. But in the end, 11 months is not a very long time, given the fact that the Fed has raised rates so much. If we had the inventory, we would be busy.
That's true.
No question. We just would. It's not, at this point, it's no longer the interest rates. It is a little bit on second homes. If at lower, there's been some changes that Fannie and Freddie or that FHFA has made about second home pricing. But if we had the houses, we'd be busy. Well,
and if the interest rates do fall, there will be people who will be able to afford that maybe can't afford at the higher rate.
Right.
Sort of on that line. But to your point is that what we would be seeing, I think people have sort of gotten used to it. Sure, no one wants to see a 7 handle on their mortgage rate. And so whenever we get kind of close to that, you do see kind of demand fall off, at least you're looking at some of the mortgage demand numbers that come out weekly. But people have sort of said, okay, rates are in the 6s. And if they need to move for whatever reason, they're like, all right, we're going to have to do it. I do think you do have a lot of people who are in that sort of golden handcuff situation where they have a 2 3/4 mortgage. And they're like, no way am I leaving this house.
Right. Well, and right now, if you have a credit score that's under, say, 680, you're in the 7s.
Yeah.
No question.
Yeah.
You know, you're barely in the 6s right now if you've got a 740 or above credit score.
Yeah.
Like we're hanging on for dear life.
And so, yeah, I mean, so if we could get some rates moving in the right direction, it will open up to buyers being able to, afford that house. But as you point out, inventory seems to be the real problem because, you talked about it with Sherry and, you just look at what's happening. You talk to any realtor and they're like, I got 5 people that want to buy a house and they can't find anything.
Our whole team has multiple people pre-approved for mortgages and they can't find houses.
And what's interesting about that is that, you got 5 people who can't buy because they can't find a home. You probably have 10 to 15 who maybe are either in the golden handcuff situation or maybe because rates are higher, they just can't afford it. And so they're gonna have to wait till rates fall. And so that just shows you what is going to happen when we do have that moment when rates do begin to fall. That pent up demand is going to be there. And so let's hope that this builder confidence continues.
Well, and that right there, just to repeat ourselves, and what we've said on the show, pretty much ending it every time was, go buy. If you need to buy a house, go buy a house now because you're going to have a hard time finding one.
Yeah.
And if you're waiting, because there is a whole group of people that are waiting for rates to go down. And I don't think you want to be a part of that rush when it happens because when it does happen, the inventory situation will not have been improved. Yeah. Because I think it's going to probably happen in the next year to 18 months, but the inventory situation will not be much better, I think.
No,
unless people really do, like in this town, like all the people, if all these people that are pre-approved just said, heck with it, let's go to Brunswick County because there is houses out there.
Yeah, that's true.
But they won't do it. People that want in New Hanover County want in New Hanover County.
Yeah. Well, unfortunately, the inventory is saying no to them.
Right.
But yes, I mean, I think that is the important takeaway. I know we talk about on every episode that if you are thinking about buying, give us a call here at TowneBank Mortgage because there's so many of these scenarios like that we've been talking about that you may actually be in a better position to buy because it's so funny because everyone thinks that it's a seller's market and it really isn't. I mean, they're still seeing a buyer's market, but you're still seeing multiple offers on properties. You're still seeing, put over ask. And so it's not as great of a market as everyone thinks it is.
It's not a buyer's market.
No.
But again, if you buy now, if rates go up, you'll be happy that you bought now. If rates go down, you'll get to refinance. You know? So get in line, make that offer that's going to be a little over ask because everybody else is doing that right now, and get that house, get it done, and then, we'll refinance you down the road, hopefully. Yeah.
We definitely will.
we will. Nobody refinances from 6 to 8, though.
Yeah, that's true. That's very true. So once again, give us a call here at TowneBank Mortgage or visit us online, TowneBankMortgage.com. And, I guess that's it. And we'll see if July is any different. More than likely not, but we'll be talking about it. So we will talk to you guys in a month. And David, as always, thanks for being here.
Till then.